Welcome to Finance Gen. Today, we're diving into the ultimate guide on how to build a $1 million portfolio from scratch. That's right, you heard me correctly. From 0 to 7 figures. Now, before you click away thinking this is just another one of those get-rich-quick schemes, let me assure you, it's not. This is about putting in the work, staying consistent, and making smart financial decisions that will pay off in the long run. Look, I get it. $1 million might seem like an impossible dream, especially when you're just starting out. But trust me, it's achievable for anyone willing to put in the effort. Over the course of this video, I'm going to break down the exact steps you need to take to make that dream a reality. We'll cover everything from setting clear financial goals and budgeting like a boss, to harnessing the power of compound interest and diversifying your investments. So buckle up, grab a notebook, and let's get started on the journey to building your $1 million portfolio. Alright, let's kick things off with the foundation of any successful financial journey: setting clear, concrete financial goals. Think of it like this: if you don't know where you're going, any road will get you there, right? But that's not how we play the game. We're not about that aimless wandering. We want to reach that $1 million milestone, and to do that we need a roadmap. The first step? Define what financial success actually looks like to you. Is it retiring early? Buying your dream house? Achieving complete financial freedom? Whatever it is, write it down. Be specific. Instead of just saying, I want to be rich, quantify it. I want to have a net worth of $1 million by age 40. See the difference? Now break that big, hairy, audacious goal down into smaller, more manageable chunks. What milestones do you need to hit along the way? Maybe it's saving a $10,000 emergency fund, then putting a down payment on an investment property, and then maxing out your retirement accounts. Having these smaller goals makes the journey less daunting and provides a roadmap to keep you on track. It's like hitting those checkpoints in a video game. You know you're making progress and it feels damn good. But here's the thing, don't just set it and forget it. Write your goals down somewhere. You'll see them every single day. Put it on your bathroom mirror. Make it your phone background. Tattoo it on your forehead if you have to. Okay, maybe not that last one. The point is, you need to be constantly reminded of what you're working towards. It's easy to get sidetracked by impulsive purchases and lifestyle creep, but when you have that constant visual reminder of your goals, you're more likely to stay disciplined and make choices that align with your long-term vision. Remember guys, a goal without a plan is just a wish. So let's turn those $1 million dreams into a reality, one step at a time. Alright, now that we've got our financial goals locked in, let's talk about the real MVPs of building wealth, budgeting, and saving. I know, not the most exciting topics, but trust me, these are the tools that will take you from zero to millionaire faster than you can say compound interest. First up, budgeting. Budgeting is about taking control of your money and making it work for you. Understand where your cash is going to make conscious spending decisions. I recommend the 50/30/20 rule. It's simple and effective. 50% for needs, 30 for wants, and 20 for savings. Needs include rent, groceries, utilities, and debt payments. Wants cover dining out, entertainment, and travel. Savings and investments make up the remaining 20%. Automate your savings to make it a non-negotiable part of your plan. Set up automatic transfers from your checking to savings every payday. Think of it like paying yourself first. Even small amounts add up over time thanks to compound interest. Be consistent and make saving a habit. Chapter 3, Compound Interest, the eighth wonder of the world. Alright, let's talk about everyone's favorite topic, compound interest. Albert Einstein allegedly called it the eighth wonder of the world, and for good reason. It's the secret sauce that turns small, consistent investments into a massive pile of wealth over time. So, what is compound interest exactly? In the simplest terms, it's interest earned on interest. Imagine you invest $1,000 and earn a 10% return in the first year. You now have $1,100. But here's the cool part. In year 2, you're not just earning interest on your initial $1,000 investment, you're earning interest on the $1,100. And so on, and so forth. As this cycle continues year after year, your money starts to snowball, growing exponentially over time. The longer you let your money compound, the more powerful the effect becomes. It's like a financial avalanche of awesomeness. To really illustrate this, let's look at a real-world example. Let's say you start investing $500 a month at the age of 25. and earn an average annual return of 8%. By the time you hit 65, you'll have over $1.2 million. Now let's say you wait just 10 years to start investing. With the same investment amount and rate of return, you'd end up with just over $400,000 at age 65. That's the power of compound interest, my friends. The earlier you start, the more time you have for your money to grow exponentially. But here's the thing, compound interest isn't just about time, it's also about consistency. The more consistently you invest, the more you benefit from this compounding effect. Even if you can only afford to invest a small amount each month, do it! Every little bit counts and brings you one step closer to that $1 million goal. Chapter 4. Diversification. Don't put all your eggs in one basket. Alright, let's talk about managing risk and protecting your hard-earned money. Because let's be real, the financial world can be a volatile place. That's where diversification comes in. You've probably heard the saying, don't put all your eggs in one basket. Well, in the world of investing, that's basically the golden rule. Diversification is all about spreading your money across different asset classes, industries, and geographical regions to reduce your overall risk. Think of it like this. If you invest all your money in one single stock and that company goes belly up, you're out of luck. But if you have a diversified portfolio that includes stocks, bonds, real estate, and maybe even some alternative investments, the impact of one bad apple is significantly minimized. Now, when it comes to stocks, you want to diversify across different sectors. Don't just invest in tech stocks because they're trendy. Spread your bets across healthcare, financials, consumer goods, energy, and so on. You can also diversify geographically. Consider investing in international stocks and emerging markets. Remember, the US stock market doesn't represent the entire world economy. Another way to diversify is by investing in different asset classes. Stocks are great for growth potential, but they can also be volatile. Bonds, on the other hand, are generally considered less risky and provide a steady stream of income. Real estate is another fantastic asset class for diversification. It's a tangible asset that can provide rental income and appreciate in value over time. Plus, it's a great hedge against inflation. The key takeaway here is that diversification is your best defense against market volatility. It helps you weather the storms and come out ahead in the long run. Remember, a well-diversified portfolio is like a good party playlist. It's got a little something for everyone. Chapter 5. Never stop learning. Knowledge is your financial powerhouse. Alright, let's wrap things up with one of the most important aspects of building $1 million portfolio: continuous learning. The financial world is constantly evolving, and to stay ahead of the curve, you need to be a lifelong learner. Think of it like this. You wouldn't expect to become a doctor or a lawyer without constantly updating your knowledge and skills, right? The same goes for managing your money. The more you learn about investing, personal finance, and the economy, the better equipped you'll be to make informed decisions and grow your wealth. So how do you become a financial whiz? Well, you're already doing it by watching this video. But seriously, there are tons of resources available to help you expand your financial literacy. Read books and blogs by reputable financial experts. Listen to podcasts and watch YouTube channels dedicated to personal finance, like this one. Take online courses or attend workshops to deepen your understanding of specific investment strategies. The key is to be selective about your sources and make sure you're getting information from credible experts. Be wary of get-rich-quick schemes and anyone promising guaranteed returns. Remember, if it sounds too good to be true, it probably is. And don't be afraid to ask questions. If you don't understand something, ask a financial advisor, a trusted friend or family member, or even just Google it. There's no shame in seeking clarification and expanding your knowledge. The more you learn, the more confident you'll become in your ability to manage your finances and make smart investment decisions. Remember, knowledge really is power, especially when it comes to building wealth. Outro: start building your $1 million portfolio today. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe to the channel for more tips on building your financial future. And don't forget to hit that notification bell so you don't miss any future uploads. Remember, building $1 million portfolio isn't about luck or hitting the lottery. It's about setting clear goals, making smart financial decisions, and staying consistent with your investments. So what are you waiting for? Start implementing the strategies we discussed today and take control of your financial destiny. I'll see you in the next video. Thanks for watching. If you found this video helpful, Make sure to like, subscribe, and hit the notification bell for more tips on building your financial future. See you next time on Finance Gen.